Breaking news this morning on Martyn Lucas Investor. As I've been saying for a long time now, we are in a bear market rally and the bull market won't start until the late spring, summer, if not longer. Why? Well, for one simple reason. Look at this. We saw CPI the other day. Now we got PPI. Producer prices for final demand in the US increased 0.7 month over month. This is way up from expectations, way up from forecasts. So be very, very careful if you are in a high speculative stock like Virgin Galactic right now. Anything that's using finance, that's borrowing money, that's got debt, and isn't making any money right now is very, very risky. Okay, so the most in 7 months and higher than market forecasts of 0.4%. Goods prices jumped 1.2%. Also the largest increase since rising 2.1% in June, led by a 6.2% surge in gas costs. Remember, this is not good for inflation. The Fed realized that this is going to be a long haul. A lot of excuse me, this is made during a live show. Unedited, as all my videos are, always made during a live show. This is my portfolio right now. We've got a little bit of impact, not much, because my portfolio is very defensive. It's why I'm buying J&J and Coca-Cola and VU, the S&P 500, because we are heading to more difficult times. This is a time to dollar cost average, and that's why Virgin Galactic is a small part of my portfolio. I don't need to risk anything right now. I can just hold it. Anyway, let's go back to the report and look in more detail. The indexes for residential natural gas, diesel fuel, jet fuel, soft drinks, motor vehicles also moved higher. Conversely, prices for fresh and dry vegetables decreased 33.5%. That's interesting. The indexes for residual fuels and for basic organic chemicals also declined. Meanwhile, services costs edged 0.4% higher, mainly hospital outpatient cares 1.4%. The indexes for automobiles and automobile parts retailing, health, beauty and optical goods retailing, portfolio management, chemicals and allied products, wholesaling and airline passenger services also moved higher. Also, in contrast, margins for fuel and lubricants retailing fell 17.5%. So as I said before, and as I've been saying consistently day in and day out on my show, right now, a defensive stock is what you need. You can't fight the Fed. You can't fight the situation we're in. We are in a bad economic climate right now. It's a bear market rally we've had. However, you can still win. You can still win on a bear market just as you can win on a bull market. What you are doing right now is buying defensive stocks. Stocks that aren't really affected by or affected less, should I say, by inflation. J&J is an absolute steal for me right now. It's an absolute bargain. If we look at it right now, it's in one of its troughs. Why? Because it's going through the talcum powder court case. This is where my money's going. This is where the smart money's going. Granddad stocks, I like to call it. Companies that always make money, that always pay dividends, that will ride out any storm. Coca-Cola is another example of that. This is where my money's going. So my Virgin Galactic high-risk speculative stocks, which it is, no matter how bullish you are, it is speculative. It's not making money right now. It's burning through its cash. It needs to get passengers into the air quickly. No matter how bullish I want to be or how bullish I actually am, it isn't making money. And companies like this are in danger in an economic climate like this. And don't forget, those figures we just talked about, PPI, will affect the rich as well as the poor. And if they decide they can't afford to fly and Virgin Galactic need them to fly, then there's a problem. Right. So that's what that's all about. So PPI, what do you think today? It is getting worse. We were expecting this to slightly improve. So this will affect the markets. But I think most people, to be honest, who are honest with themselves and look at the facts, not what they want the facts to be, know that we are actually in a bear market rally, and they're investing in the defensive stocks. This is what I'm doing. It's why I'm holding my positions. It's why I'm investing what I'm investing in. So I wish everyone the very, very best, but be careful. PPI today is bad, really bad, not really that unexpected, even though the market was kind of anticipating something better. For me, I already expected this. This is why I am buying and continuing to buy into defensive stocks. I would rather have a portfolio that grows steadily over time, that gives me no stress and reaches my goals when I need it, than try and ride a wave of greed and try to make money now when I don't even need it. I need it in the future. So now is not a time to cash in and make money. Now is a time to dig the ditches, prepare for the rain to come and collect it all. Excuse me, prepare for the future. And that is, at the end of the day, why we invest after all. Until next time, take care of yourselves and each other. But before I go, very, very important. If you click up here, tonight's premiere, we're raising money for the Red Cross. Way more important than any of our stocks and shares. If we're making money, we want to help others less fortunate than ourselves. Click up here and that will take you to the full playlist of my Red Cross live events. Every night we have 15 parts. Tonight is part 4. Hopefully you'll join me for that. Every night we feature a different song and all the money goes to the Red Cross. Nothing for me whatsoever. And there are links below where you can donate directly to the Red Cross, directly to Turkey and Syria. None of it comes to me, 100% direct to them. And now it's time to say, take care of yourselves and each other.